It's all about the dollar and it's all about rates and the trajectory with the weak eco data that we've received over, probably the last 4 to 8 weeks, the jobs number this morning as well. The trajectory has now been that the Fed is more than likely cutting in September. Personally, I think maybe they even need to consider July, though that's off the table for now pretty much. But the eco data has been weak. And gold has really followed, the path of the dollar in an inverse relationship. So to me, when we see how the dollar has hovered around 105 or so over the last, weeks or so, to me, it has not been because of dollar strength. It's been because of other currency weakness. So now that we're starting to see, this eco data really get softer here, I really think that we're going to see a dollar that probably challenges 104 sooner rather than later. That's good for gold. That definitely has been some of the impetus as we're seeing gold really trying to attack those all-time highs again.
So, Scott, isn't this the most, I would say, a great place to hedge your bets? If you're concerned about the election, is gold right now the ultimate safe haven play?
I don't know what the ultimate is, but yes, it is a safe haven play, both from the risk off standpoint and, quite frankly, from the dollar standpoint, from rates standpoint. Is there, potential downside? Of course there is. But I do think that gold is a great place to be here. If you look over the last year or so and you saw the amount that central banks around the world were piling into gold and buying it and storing it, it's off the charts. It's unbelievable. So I really think that the downside potential as gold is a lot less than what the upside could be over the next 6 months or so.
Yeah, UBS had put that within their Election Watch 2024 as well, saying that they think gold represents an interesting opportunity, lifting their stance on the asset to most preferred, given some of the concerns about geopolitical polarization, inflation, the U.S. fiscal deficit and whatnot. Scott, how high do you believe gold can go? If we're talking new all-time highs, what is the marker that you believe that it could move to and perhaps even through?
Well, that all-time high, we're about $80 away, $70 away. It's, 24.50-ish or so. If you look technically at the charts here, there's a pattern that could really take us up to 2650, 2700. I don't think we would get there that quickly, though. Listen, with all of the geopolitical risk out there and, the added risk around our election right now, or added, I should say, uncertainty around our election here, if we break those old highs here, there's really, from a technical standpoint, not a lot of resistance there. We could see a pretty quick move up.
Scott, how are you, outside of gold and commodities, how are you trading into the weekend? What trades do you have on? We have a president giving a very key interview at 8 p.m., has a couple campaign stops on Saturday and Sunday. Monday, you get the sense that something big could happen and you could see a lot more volatility in markets.
So I have been long and continue to be long, full disclosure here, some downside put spreads in SPY, in the Qs. I'm long some VIX upside calls. Obviously, those haven't really worked over the last several weeks or months. But, something that I always discuss with my clients and something that I always, talk to people about is buying that insurance when it's cheap, right? We all want to go out and price our homeowners, our auto policy, our any insurance, and we want to get a bargain. We want to get it on sale. Protection is cheap right now in the marketplace, whether you go out a month, whether you're going out 6 months. So what I'm telling people is, you want to stay in the market, you want to, capture this grinding move to the upside, fantastic. Buy the cheap protection, and if you have to give back, a little bit, 0.5%, 1%, whatever it is, fine. But there's this old trading adage of buy when you can and not when you have to. And what that means is, once something happens to the market, once, as you just said, that we're maybe getting set up here for something to happen, it's too late. The cost has doubled, tripled. So buy that protection when you can. So that is how I am positioning. The day trading in the marketplace is fantastic right now. Even though it's summer, we're seeing some volatility in pockets. Overall, though, downside protection way too cheap, in my opinion.